Hi, good evening everyone, and welcome to this evening's personal tax revision session. So tonight we're going to be looking at task 4, which is about income tax payable. So we're told here that Julie has the following income for 23-24. She's got total employment income of £38,650, property income of £20,000, building society interest received £1,500, ISA interest received £220 and dividends received of £8,700. During 23-24, Julie paid pay-as-you-earn of £11,782 and also made gift aid donations of £300. And then the task says to calculate the tax payable by Julie in 23-24. Okay, so the best way to set this out is to, first of all, have non-savings income. And then we've got savings. And then dividends. And first of all, we've got employment income. Total employment income, £38,658. Then we've got property income of £20,000. Then we've got building society received, £1,500. We've got ISA interest received. So ISA interest received, that one would be exempt. So what we'll do is we'll include that, but we'll put it as nil. And then we've got dividends received, £8,700. Dividends received. And then we've got total income. So if we do it by column, so non-savings income, total income, £38,650 plus property income of £20,000 gives us £58,650. Then we've got savings income of £1,500 and dividends of £8,700. Then we need to deduct the personal allowance. And just remember to watch that if income exceeds £100,000, then the personal allowance would need to be restricted. But in this case, we don't need to worry about that. So it's going to be the full £12,570. And that gives us with taxable income. So taxable income is always after the personal allowance has been deducted. So £58,650 less the £12,570 gives £46,080. And I've got savings and the dividends. Okay, so the basic rate band. So within the task, we're told that they made a gift aid donation of £300. Because of the gift aid, we need to extend the basic rate band. And remember that we would always extend it by the gross amount of the donation. So we need to gross up that £300. So first of all, the gift aid would be the 300 divided by 80 times 100 gives us £375. So the basic rate band would be the 37,700 plus the £375. So £38,075. Remember to always show your workings, so whether it be for extending the rate bands or restricting the personal allowance, make sure that you do show it. The basic rate is now the 38,075, and that will be taxed at 20%. So £7,615. So taxable income was 46 for non-savings income, that is 46,080, and we've taxed £38,075 of that. So that means that we've still got 8,005 of that non-savings income remaining. So 46,080 minus £38,075 leaves us with £8,005, and that's going to be taxed at a higher rate. So 8,005 times by 40% gives us £3,202. Next, we've got savings income to tax. So they are a higher rate taxpayer, so they're entitled to a £500 savings allowance. So £500 at 0%. Then the remaining is going to be taxed at the higher rate. So the remaining £1,000 will be at 40%. And then we've just got our dividends to tax next. So everyone's entitled to the £1,000 dividend allowance. So the first £1,000 will be taxed at 0%. So remember our dividends was 8,700. So the remaining 7,700 will be taxed at the higher dividends rate. Which is 33.75%, giving £2,599. That gives us a tax liability of £13,816. So that is as totaling up the 7,615 plus 3,202 plus 400 plus £2,599. That gives us that £13,816. Now from our tax liability, we've got to deduct any tax paid at source, and we're told at the beginning of the task that the pay as you earn is £11,782. So we need to deduct that now. So pay as you earn £11,782, and that leaves us with tax payable. So that's £13,816 minus the pay as you earn of £11,782 gives us tax payable of £2,034. In part B of the task, it says that Julie is thinking of joining an occupational pension scheme and paying £50 per month. As a friend has told her, she will be able to extend a basic rate band. So remember that an occupational pension scheme is deducted from the employment income. It doesn't extend the basic rate band. It is the personal pension that does extend the basic rate band. So it says to explain to her the tax implications of an occupational pension scheme. Remember that when you're answering a written question, to make sure that you do write in full, complete sentences. So we need to say something along the lines of that an occupational pension or a contribution towards an occupational pension will not increase your basic rate band. This is being confused with a personal pension. So contributions to an occupational pension are deducted before pay as you earn is calculated. If you contribute so she was talking about paying £50 per month. So if you contribute £50 per month, your salary will be reduced by £50 before pay as you earn is deducted. Oops. So you would save £20. So there's a higher rate taxpayer, so it would be the £50 times 40%, which gives us a £20 saving. So £50 times 40%, as you are a higher rate taxpayer. So £50 would be paid into your pension, but it would only cost £30. So that's the £50 minus the £20 saving. From your net pay. So thank you everyone for attending this evening's personal tax revision session.